Ladies and gentlemen, boys and girls, you're watching yet another episode of Crypto Hot Seat. My name is Dylan Love. I'm the managing editor of cryptocurrency research investment firm Token Metrics. And today we're joined by Mr. James Wang. James is the head of tokens at Amun. James, thanks for joining us on the show.
Hey, Dylan. Thanks for having me.
So there's a lot to talk about. You guys are about to launch a new product. Definitely want to learn all about that. But before we get into what's new and coming up, I'd love for you to give us kind of the 1,000-yard view of what Amun is all about, what you guys are doing. We were talking a moment ago, you've got 2 tokens live right now. What do we need to know about your token economy and what Amun is all about?
Sure. At Amun, we're focused on building investment products that help people get access to crypto in a really easy way. If you look at traditional finance, ETFs were a huge innovation, and that's made the stock market a lot more accessible and safer and cheaper and just better for kind of peace of mind, right, for folks. Before ETFs, if you wanted to invest in the stock market, you had to kind of pick stocks. Is IBM going to do well? Is Coca-Cola going to do well? But since the SPDR was introduced in 1993, the S&P 500 index ETF, you just buy one thing and you get exposure to the 500 largest market cap companies in the US. And that's ballooned to be the largest ETF product in the world. And the key value there is ease of use, auto rebalancing, low fees. We think a similar thing is going to happen for on-chain products. Right now, there are over 10,000 tokens available if you look at CoinMarketCap, and it's pretty difficult to sort out all of them and to figure out what to buy. So we figure we'll build in the spirit of the S&P 500, an S&P 8, if you will, of tokens on the Ethereum ecosystem. And that's what we launched. It's our first product. It's called DeFi is the ticker. And it essentially selects the 8 largest market cap protocols built on top of Ethereum and wraps them in a single token. You can buy DeFi off just Uniswap. And with that single token, you get exposure to the top 8. If there are changes in kind of what the top 8 is, we rebalance automatically and you get exposure automatically. So it's kind of very easy wrapper, peace of mind to get access to crypto. Our second token is DMX. It's kind of like a smart trading strategy. Crypto is always going in waves. Tokens launch, they moon, some decline. There's always something to chase. And it's just extremely taxing to follow all those kind of new token launches and what's blowing up at a given time. So DMX is our momentum strategy, DeFi momentum index. And it basically looks for tokens that have the highest price momentum on the upside, buys into those, rebalances out the ones with the lowest momentum so that you basically get a token that's automatically tracking the ones that's having the greatest price action over the last 30 days or so. So that's DMX. One's kind of a more passive strategy. The other one's more of an active strategy.
Mm-hmm. What do we need to know about this upcoming third token?
Yeah, so we really want to give people exposure to as much of the crypto economy as possible. As folks, your listeners of the show probably know, Ethereum is the center of the universe right now. All the greatest things, NFTs, DeFi, is all happening on Ethereum. But there's so much demand on Ethereum that it's literally bursting at the seams. The transaction throughput of Ethereum has basically always been around 15 per second. But with all the demand, gas fees are extremely high. So that's given birth and demand to alternate L1s, different base chains that can facilitate transactions, hopefully in a more higher throughput manner. We have seen kind of Solana kind of grow, Polygon grow, Avalanche grow. These are all very interesting ecosystems. And our goal is to kind of give you access to these ecosystems in a way that kind of takes the burden off you. So the first one of these ecosystems we're going to kind of launch in is for Polygon, arguably the most successful scaling solution so far for Ethereum. Polygon is a sidechain described by most for Ethereum, and it has a very rich ecosystem of applications on top, built on top of it. So the token we built is called Pico, or Polygon Ecosystem Token, and it will basically wrap the top kind of applications on top of Polygon in a single token, as well as the fundamental token of Polygon itself, Matic. So the composition is 50% Matic, 50% the other tokens, of which there are 5. That's sufficiently large and liquid on Polygon. And just like with DeFi, one token gives you access to the entire Polygon ecosystem. And yeah, I think it's a very exciting product. You can buy it on Polygon, and you can also, using our bridging technology on our website, you can just buy it with one click on Ethereum as well. So you don't have to manage the Polygon wallet. You can just have a wrapped version. And it's like, I don't know. One way to think about it is, let's say you wanted to invest in Brazil. It's like having an all Brazil ETF, a single token you can buy in your Schwab account, and all of a sudden you're broadly exposed to that whole economy.
Very good. It's intriguing to hear you talk about this stuff by liking it to an ETF, as you did with the earlier token examples, because for anybody who's unaware watching, you come to crypto from ARK Invest. And ARK is kind of famous for its disruptive ETFs led by Cathie Wood and all that stuff. I mean, I can't expect you to capture your work experience in a soundbite, but could you talk in general about what it's like being an analyst for ARK Invest?
It's very stimulating. Basically, the way ARK Invest views the world is that most investors kind of go in the world expecting this kind of gradual year-by-year change, and thinks the future will more or less resemble the past with a little bit of delta. The fundamental outlook of ARK Invest is that we're living in a special part of kind of the historical epoch where things are changing very rapidly. Things are changing exponentially. So the future looks very different from the present. And all the research is geared on identifying which technologies will gain adoption and fundamentally look really different in 3 to 5 years' time versus today. And why focus on that? Because most market participants in traditional finance is focused on the next 12 months, and they have these linear kind of views on the present. So if we are correct, basically at ARK, it's like, if we're correct in having a very distinct and different forecast of the future than what the market is anticipating, then there is a huge kind of mispricing of the asset, of the stock, and there's a huge amount of alpha to be gained. That's like the core worldview, and we spent every minute of our lives there trying to find technologies and companies that fit that mold of thinking. So when I was there, I focused on companies like NVIDIA, companies like Alphabet, Facebook at the beginning when it was still early days or mid days of Web 2. And then toward the end, a couple of years, I focused on software companies serving the enterprise, things like Twilio and Datadog and companies like that. All the companies that were going to be kind of on the sweet spot of the S-curve.
Very good, very good. What kind of overlap, if any, did you have with Cathie Wood? Were you in meetings with her? I imagine she's probably in meetings with lots of people, but was there an analyst meeting? What are we allowed to know about how she runs her firm?
Oh, it's super transparent. My table is next to hers, so we chatted shop, if you will, any time of the day. We had kind of stock meetings on Monday when we would rebalance the portfolio, talk about news. Maybe Facebook, had a scandal. Maybe there was a China kind of trade situation. Mondays, kind of like the situation war room. All the analysts would sit with Cathie in turn and go through their coverage. We'd work on our own Tuesdays and Wednesdays. On Thursdays, we would meet with Brett, who directs research for ARK, and really go through and work on the models, our forecasts, and kind of do the deep work involved in building our thesis. And on Friday, would invite outsiders into the company. So anyone who's interested can sign up, and there's a Zoom account, and it's basically one big webinar, if you will, but mostly with kind of a core team participating. But the great thing about Friday was that this brainstorm meeting is that we could get outside info flow, and we could have outsiders kind of vet and really hear our logic. So that was a very innovative way, I think, for an investment firm to engage with the community. Normally in a hedge fund, you're literally trying to keep everything as secret as possible. But at ARK on Fridays, especially early days, we were literally just trying to give it away and ask anyone to come. If you found this on the 5th floor of 19th Street, if you just walked in and it's like, hey, here, I just want to attend brainstorm meeting, we'll be like, sure, come on in. So it's an extremely open atmosphere.
Yeah, very good. Was it during your time at ARK Invest that you discovered crypto, or when did you first start going down the crypto rabbit hole?
Yeah, it was at ARK when I discovered crypto. I worked with an analyst, Chris Berniski. We covered the internet theme, and crypto is built on top of the internet. So he very quickly got sucked into Bitcoin as an idea. He's very interested in kind of like both theory, the monetary policy, as well as the technology behind it. I wasn't. I was like, okay, he's turning into a crypto guy. Whatever, it's no big deal. But I did see that this Bitcoin thing was weird enough and early enough that it probably warranted an investment. So he convinced me, at least very strongly influenced me to get into Bitcoin initially, and then Ethereum very quickly after that. So that's like 15, 16 timeline. But I wasn't mentally engaged with it at the time. To me, it just seemed like perhaps speculation, perhaps like some kind of a hedge against the state going rogue. But I was just not, there wasn't enough stuff in the ecosystem for me to really get excited about. What really changed was really kind of in the last year when Ethereum has developed a really rich software ecosystem with DeFi and NFTs. And that made sense to me. You know, I'm ultimately a computer guy, a platform and applications guy. So when I could see it in terms of platform and applications, I'm like, this is cool. This is like the internet with platform and applications, except it also has its own kind of money. And I think that's why crypto moves so quickly, because in the regular economy, you can have ideas and build the thing, but you have to separate the building of the idea from the gathering of the investment funds to build your idea. Hence, you have the startup ecosystem and the VC ecosystem. With crypto, we basically found a way to have digital forms of scarcity, tokenized forms of value. And as a result, you have companies, startups can effectively print their own cash, which is like kind of wild, but also so key to removing friction from the whole process.
Now anybody can IPO basically.
Exactly. If you can fund your own process, now you don't need to convince a bunch of VCs to fund you. You can just go straight to the users and have them kind of bootstrap your process.
Yeah, very interesting. So let's talk about this figurative IPO for Amun. Would you mind talking about what was day zero like for you there? How did this whole thing get started? How did it get off the ground?
Sure. The history of Amun is intimately tied to a company called 21 Shares. Amun was founded by Haney and Ophelia. They met, I think, at some house in Stanford, and it was totally serendipitous. And they were both trying to help their parents, their moms specifically, to buy Bitcoin. Paradoxically, their moms were so in the vanguard that they were the actual catalyst for the company. They're like, I think this Bitcoin thing is going to be big. How do I buy it? And they had no easy way of buying it. And I think one of them lives in Europe. So it's like even a different regulatory environment. So they got together and they're like, you can buy gold as an ETF. You can buy real estate as an ETF. Why can't you buy Bitcoin as an ETF? That's kind of the genesis of the idea. And over the next year or so, they decided to build a company called 21 Shares that helps you buy crypto via the traditional ETF or ETP structure out of Zurich. One key decision was actually founding the company in Zurich because the Swiss regulatory environment was a lot more friendly than the US one. In the US one today, even as of now, we don't have a Bitcoin ETF, even though countries in Europe long have had access to exchange traded products, not for just Bitcoin, but for Ethereum, Cardano, Stella, you name it. They have like ET products for all of those things. So they built it out of Zurich, 21 Shares, easy way for people to buy crypto using brokerage structure. And that company has now, succeeded very well. It's got $2 billion or so in assets. And that's kind of the core starting point. Being hardcore crypto believers, Hanny and Ophelia, of course, also knew the future was kind of on the blockchain. It's kind of Netflix early days. You couldn't build the streaming version day one, so you built the delivery envelopes. But you knew the future was always going to be streaming. That's why it's called Netflix and not Envelope DVD Corporation, right? So the real goal of the company is to be first and best in class on chain as a pure DeFi product. And that's how Amun came about. It was incubated as this sister company to 21 Shares, focused purely on providing DeFi and decentralized products on the blockchain. So Amun's been operating and launching tokens since last year. I joined about 3 months ago. I quit ARC and kind of like learned about crypto on my own for 3 months. My plan was very simple. I figured I'd stayed long enough at ARC, but crypto was getting interesting. But I had no job lined up or anything, and I wanted to take a break. I'd worked there for 6 years.
Mm-hmm.
So my plan was like, crypto is getting really interesting, especially this NFT stuff and this metaverse stuff. So I'm going to quit my job and then go to Decentraland and then meet a bunch of really cool people. And the next thing I'll know, I'll be in their houses in Lower East Side and having a party, and it'll be like the Matrix with Neo. So that was my plan. What happened was I quit my job. I went to Decentraland and there was no one there. There was like one guy there chatting to me with like a bubble above his head. I'm like, what are you doing here? It's like, I don't know. I'm just checking out Decentraland. So Decentraland, as my last experience, was basically a ghost town for the most part. Sometimes they have parties, I think, but that didn't work out. But I got into DeFi very quickly because I figured, there seems to be more real action there with lending and borrowing with crypto protocols like herein and Aave. That was very cool. So I got to experience this, the crypto yield in an environment today where there's no yield, 0.5%.
Mm-hmm.
What's up. So that got very interesting. And I basically spent kind of 3 months learning about crypto on my own. And I wrote about it in my newsletter. I tweeted about it. I interviewed some folks on YouTube. Very, very fun time learning about the space. But eventually Kathy made an introduction with me and Amun. Kathy is actually on the board of Amun. She's the only independent board director for Amun. And she knew that they were looking for someone to kind of grow their token business. And they're like, James is doing nothing. He's just like hanging out in Decentraland. You want to talk to him? So we chatted, and then here I am.
Yeah, very good, man. That's all very interesting. I want to ask you a question. It's a crypto agnostic question, so maybe the answer involves crypto, maybe not. But I'm very curious for your take on if somebody is beginning a career in finance, where and how should they get started? Is crypto the only ticket to focus on? Maybe it's a hybrid approach in the year 2021. What do you think?
I think it depends a lot on the individual's temperament and skill set. There are many ways to succeed in TradFi, in fintech, and in crypto, and that's kind of the slider of how new or fancy the thing is. TradFi, traditional finance, you can still have a good career in banking and all that. They're not dead, but you're kind of on the wrong side of history if you go there. But some people may prefer a structure that is more known and with less unknowns. It's just a temperament thing. Middle of the road is fintech, right? It's like half tech, half finance. You get the upside of kind of like a growth company. If you join early enough, you still get that startup vibe. And that's a good option for many people as well. And fintech is still a growing industry. I think it's very important industry to bridge the world of traditional finance and crypto. Or if you're very much like kind of like on the avant-garde in terms of like you want to chase the newest thing and you're very pro risk, I think crypto is definitely the place to be. It's where I guess the all the action, the most interesting action is. Even fintech companies are trying to be crypto companies. So depending on your temperament, pro risk or pro change or anti change, that's kind of the slider of where you can be. Even within crypto, I think depending on your skill set, there's so many roles you can take. It sounds kind of intimidating to work in crypto. It's like, I don't know anything about blockchains. Like, how do I even start? The truth is you could succeed in many ways, especially in the 2021 version of this industry versus, last time around. If you're a developer, if you're pretty good at coding, I think learning Solidity and Rust are fantastic ways of getting into crypto. The industry is absolutely starved of developers, competent or even semi-competent developers. So if you can write Solidity, chances are you can find a job somewhere in crypto. If you're a designer, designers are in extreme demand in crypto as well. Design is held in very high regard in crypto. New protocols are constantly launching. They need front ends, they need logos. That's a very, very healthy job. Someone who is used to designing for Facebook or Instagram can know almost nothing about crypto and just switch industries and join as a designer. So that's another a very popular avenue. Oddly enough, product management, which is like very, very bread and butter for traditional Web 2 and internet companies, is relatively speaking in less demand in crypto because it's just earlier. So like initially I was looking for a product role in crypto, and I found there was a lot more roles for developers and designers than for product managers. But there are still a good number of opportunities for product managers. They're typically for larger, more mature systems where you begin to need product management as a discipline. In the beginning, if it's just two people, you don't. Product manager is just too fancy of a title to require. So that's another kind of area that people can skip over. But also, I think importantly for crypto, there are opportunities for people that otherwise are not really valued in the traditional kind of tech companies. There's a lot of demand for technical writers, documentation for how these protocols work. So if you're pretty technical and you like writing, I think in the traditional Web 2 tech company, you're regarded as this, I don't know, accessory. It's not very glamorous, right? But in crypto, it's very key. Your documentation is literally within one click of the protocol's homepage. You can get paid in tokens. If the token's Moon, you can 10x potentially. It doesn't always work out that way. But as a technical writer at Facebook, you don't have a chance for that kind of upside exposure, right? So writers, I think, have a great are well regarded in crypto. You don't have to only do technical writing. Content writing and marketing is extremely in demand there. And even jobs that simply do not exist. And these are the ones that I really like. The jobs that simply do not exist in traditional tech exist in crypto, like meme artist / shit poster. Like that is literally a job title. I'm not even like making it up. That's a job title that Git grant. What is it? Coin. There's the Git Foundation that basically funds these Ethereum efforts. That's a job, and it's like a 100K job. So if you're just an internet troll, you have a future in crypto.
That's very good. Yeah. It's cool to hear that there are many routes up the same mountain. I want to ask, and maybe we can conclude on this question, but one word that came up a couple times throughout your answer there was the word temperament. And you worked at ARK Invest for 6 years. Now you're involved in crypto pretty seriously. Could you talk in general about how your own temperament has evolved? And let's use like day one of ARK to present, if you'd be so kind to indulge me on that question.
I really like this question because no one asks such a question. It's always just what's when Moon, that's the normal question.
Yeah.
I think temperament is, I find it, I'm always thinking about it. If you want to go using the Myers-Briggs taxonomy, I'm like a ENTP by temperament, very ideas driven. I just love new ideas and what's possible. I think, in a research analyst role at ARK, it was a little bit more of an introverted temperament because you're doing analysis. Analysts tend to be more of an introverted temperament because you're just trying to figure out in the spreadsheet or in the data what is happening. Whereas in crypto, I think and in tech in general, maybe the axis that's most telling of whether or not you will like it is this axis, this temperament called openness in the Big Five system. And it's essentially how do you feel, how open you are to new ideas. High openness people love, crypto because it's so new. And low openness people, I think, will find it too disruptive, jarring, unorganized, and will like things that are more quantifiable and known, like traditional finance. So I think tech by definition attracts high openness people because its fundamental premise is we can build something new that doesn't exist. And crypto is at like the absolute frontier of tech because it's like, we'll do all the tech thing stuff, but we'll invent a new thing called new money on top of it. So it's like it extremely biases you, self-selects for people with high openness. And yeah, I think that's like the probably the primary axis of like how temperament fits with crypto.
Yeah. Well, thank you for all that insight. That's James Wang, head of tokens at Amun. James, thank you for sharing your time with us today. We really appreciate your insights.
Thank you, Dylan. That was great.